So this is the analysis for Monday the 25th of September for Euro Pound. Now, Euro Pound is it's a difficult one. It's not easy to determine where this market's going. There's a lot of Brexit related news. There's a lot of speakers. There's a lot of influential politicians that at a whim can come out and say something, and the markets move accordingly. So it has been somewhat difficult to grab a hold of a trend on the Euro Pound. Now, if we have a look at last week, or even a couple of days previous to that, we can see that price has operated within a range of 87, 83 up to, where is that? Possibly 89. Yeah, the height of the range is 89. So you're looking at just over 100 pips. This is about 117 pips ish, and yeah, it's not been easy. Now, obviously, we did identify this support. This was weeks ago, because it was support then of 87, 83 to the upside. What would actually be support or resistance, 88.51. So yeah, we were seeing three touches of 87, 83 and moved to 88.51, a break of that all the way up to 89, but then we've broken down back below the 88.51 and come all the way back down to for a fourth test of 87.83, which pretty much just confirms that it is the correct place to have put a horizontal line for support. Now we've pretty much come down to the 87.83. We've not exactly touched it. Let's just see how close we did come. We're close enough, but let's see how close we came. We came down to 87.83.4. 87.83.4. So come on, that's close enough. We've come back up to the 88.51. Let's see, the very last candle was a strong move to the upside before being sold down at the close. We've obviously gapped down. This is obviously based on German election news, North Korea, two catalysts. The German result wasn't, I think most market participants realized that they were aware that Angela Merkel wouldn't have it all her own way. So gains by alternative for Deutschland AfD was not too much of a surprise in light of the anger, you'd say, in relation to the policy of having a welcoming open door, some would say, quotation marks, of migrants. So I think the public went to send a message to Angela Merkel and the rest of the members in her party that they don't want unchecked immigration. But we're not here to talk politics, we're here to talk the markets. Now, so let's see where we are. If we go up to, we are currently at 88.31. If we break above 88.51 and hold, we do have the resistance of this 200 period moving average on the 60. But a break of that, break and hold of that also. Again, we're looking at a lot of breaks and holds, but it's difficult. A move to 90 would not be unreasonable. That's on the euro. A move to 90, but as the pound has broken out against pretty much every other pair, there is a lot of strength, a lot of buying of the pound. So the move of the euro to 90 may be somewhat limited, as there is currently some strength in the pound in the market overall. and currently there aren't any catalysts I can think of for the euro to strengthen it markedly against the pound. Now, obviously, if we do have some news or some rhetoric in regards to negotiations, there is a possibility that the euro could strengthen further if it's euro supportive, or the pound could weaken if it seems like a deal is increasingly less likely, and its impact on the United Kingdom's economy and the effect, the possible side effects of Brexit causing the Bank of England to delay their interest rate increase that they've pretty much intimated to by jawboning through speakers and members of the various internal rate setting committees. Well, I suppose there's only one rating setting committee, but yes, I think it's the monetary policy committee. I'm not sure, but we've had a few like deputy governor and members of the board come out and pretty much intimated. I think even Mark Carney came out, intimated that a rate rise is likely in the next couple of months. So as you can imagine, what usually happens is market participants position themselves, move the market in that direction in anticipation of the rate rise. So when it does come about, it's not really too surprising. The markets will react. You do have a few people that will go in and say, "Oh yeah, let's go and buy the pound." But at that time, the larger players in the market would have already been in the market and simply just pretty much playing the long game, waiting. So euro pound, I did say was difficult, but let's just go out to the higher time frames to get a better idea of where we are. So currently, if you look at the monthly chart, you'd say we're in a pretty strong uptrend, but the current month is proving somewhat problematic in that it is currently an engulfing candle forming. So we are trading quite a bit off its high, which was at 92.09, and we're pretty close to its low, and the low is, let's just double check that. Low is currently 87.74, so we're pretty close to it. I think we're about 20 pips currently. So on a monthly time frame, we're in no doubt that we are bearish, but my most important pivot being the weekly. Let's go see where we are in relation to weekly. The previous week we finished bullish. If you look at the candle in relation to it, it's a large engulfing candle, so retracement of it, while maybe supportive in the short term of bullishness, overall a retracement and then a continuation to the downside is not too unreasonable an expectation. And but I'm here to trade what I see using my most important pivots. Now, where have we opened this week? We've opened at 88.195, so let's say 88.20. So price trading above 88.20, I will hold a bullish bias if we trade above 88.20. The problem I have with trading above the 88.20 is we're so close to what has been resistance in the past, 88.51. But I'm going to stick to the rules, and above 88.20 I am bullish euro pound. So that is my analysis for euro pound. LCS. Like, comment, subscribe. Thank you.